Hello there, and welcome to the weekly outlook. Okay, looking at the data that came out on Friday, we had the core retail sales for the US, the PPI month on month, and retail sales month on month, and core PPI month on month. They all came in weaker, and then followed by prelim University of Michigan consumer sentiment, which also came in weaker, which does throw a bit of a spanner in the works for the US rate hike expectations for the coming 4 months. Now, PPI is the Fed's preferred gauge of monitoring inflation. So, if that is showing weaker readings, then it does put off the chances of the Fed raising rates again this year. Now, also this week coming, we've got the CPI data coming out at 1:30 on Tuesday. This is expected to come in slightly weaker as well. If that's the case, then it really is going to throw rate hikes for the US out the window really in the coming year, and potentially there could be signs that the US is following suit in the rest of the globe when it comes to economic growth, and we could be seeing quite a bit of a slowdown. So these are the early signs. One of the currencies that I'll be looking at the most, I think, for the rally would be the euro US dollar, as the euro pretty well much sort of held pat on monetary easing at the moment. It can't really go any further. And let's not forget from the big picture, we're pretty well, we're quite low down on in terms of dollar dollar strength on the euro. So if things are starting to show signs of reversing, then I think the euro will probably be one of the main beneficiaries, as they haven't done anything with their monetary policy for quite some time. Whereas other currencies such as the Aussie, obviously the Aussie dollar has just cut rates. The UK have just cut rates as well after the Brexit. So I think they're more likely to continue down against the US dollar than, say, the euro. New Zealand dollar as well have just cut rates and expected to cut again. So the potential for that to continue down is more so than the other way round. US dollar, Japanese yen. We have got Japanese yen GDP due out first thing on Monday morning at 12:50. That is expected to come in slightly weaker, which could cause a bit of a relief in the US dollar Japanese yen, a bit of a pullback, but I wouldn't expect that to last, especially with this newfound US dollar weakness which is on the cards, and that could just give us an excuse to resell it as well. So just take these down to a smaller time frame. Let's have a look at these in a bit more detail. So you can see there in the euro, we're coming down to this pivot point from the other day. We've got the trade recommendation that I would possibly make would be to buy euro pretty much from where we sold it last week at 11150 area, and look to trade it back up to this trend line of around about 11250, with a stop below this sort of swing low here. And then if it does continue down, then it shows that the market isn't concerned about that PPI data coming in weaker. But I would suggest that most people will be. The liquidity in the market is quite thin at the moment, with it being summer trading. A lot of people, a lot of traders away on holiday. But we'll see how the markets take to that data on Monday morning. Friday afternoon, obviously, again, either thinner liquidity, so it would be it's a little bit difficult to tell how sort of substantial these moves are. Aussie dollar, again, they've just cut rates, so we are quite high on the Aussie dollar. Now, this was rallying even when the market was perceiving the US dollar as strong. Now it's had that weak data. I would suggest possibly a retest of the 7.6, and then a little bit of a spike back up and a retest of the 7.8 level as well. So I am looking for a bit of a turnaround in the sentiment, a bit of a turnaround in the fundamentals now that US dollar has taken a bit of a change, and taken a rebalance, if you like, and we'll see how it goes over next week. We've got sort of a few shallow bits of data out on other currencies that we should keep an eye on as well, such as New Zealand dollar. But the big point, average hourly earnings and claimant count change from the UK is going to be quite important on Wednesday. And then, of course, the FOMC meeting is going to be meeting minutes is going to be quite important as well. Although we don't think we'll see anything new from that. Coming towards the end of the week, we've got Canadian dollar as well, which is expected to show weaker data. We have had a bit of a push down as oil strengthened. We saw the Canadian dollar strengthen as well towards the end of the week, but we are looking for that to turn around around the sort of price where it is now. And if we get weak data on Friday at the end of the week, then that could give that a bit of a push back up. This is the one that rallied. The US dollar was less affected against the Canadian on the downside, possibly because the Canadian dollar's quite weak as well. So we've got a few bits and bobs to look out for, but the euro is really my immediate trade for early next week. Okay, I hope you can make some pips, and thanks for watching.